Chapter 1: Construction Financial Management. At this point, you have read Chapter 1 and also having assigned to answer some of the questions at the end of the chapter. I would like to take this opportunity to highlight some of the important items on Chapter 1. First of all, the construction industry is a very risky industry, and construction companies fail due to several reasons. Some of the reasons are listed here on this slide. For example, the lack of credit, which we're seeing on our current economic situation here in this country, has caused several companies, especially those companies that are considered small, to close business. Also, another reason for construction companies' failure could be poor estimating, as well as poor project management practices. The lack of a comprehensive business plan is also one of the factors that contribute to the failure of a construction company. Financial management essentially is the management of resources. In a construction company, cash is a very important resource, as well as assets such as construction equipment, office furniture, computer equipment. But also of importance is the human capital or human assets. Construction companies, just like any other business entity, rely on the expertise and the experience of their employees to make a successful business. So it is important to understand that when managing resources, yes, under financial management we always refer to cash and assets, but management in general also include the managing of human capital. One of the distinctive characteristics of the construction industry versus other industries such as the manufacturing industry is that the construction industry works based on projects. Projects include the construction of a road or a sanitary system, or the construction of a site development, or the construction of a bridge, and so on and so forth. The project is well defined. It has a start date and a finish date, and it can be estimated in terms of cost as well as in terms of duration. So that's what makes the true definition of a project, that is fully defined, or should be fully defined, with a definite start date and a definite finish date, with an estimated cost of completion. Construction companies work as decentralized systems, meaning that each project is individual. Each project would be assigned a project manager and superintendent, but the projects are not handled from the company's main office or company's headquarters. Often the projects are managed on site with several miles of distance, or actually projects could be in another state, or out of the close range of the company's headquarters, so they become decentralized. Another characteristic of a construction project is that projects are subject to payment terms, as opposed to other industries or service industries that the payment of the is made upon rendering of the services. Well, because of the nature of most construction projects, there is going to be a series of months before the project may come to a completion, therefore requiring the use of progress payments as well as retention. Later on, we will see how those progress payments work and what retention is. But essentially, retention is a small amount of money, in terms of usually 5 to 10% of the total progress payment amount that is held back by the owner for future release. Also, a distinctive characteristic of a construction project is that it relies on a heavy use of subcontractors. Often, the majority of the work is handled by the use of subcontractors. The people that are responsible for construction managers, several people, starting with the superintendent and project managers on the job site, estimators in the field office, as well as general managers, chief financial officers or chief financial managers, and ultimately the owner of the construction company is responsible for the financial management of the construction company. As you see, managers take several assignments, and it's listed here, including managing for cost and profit. That is the key. Every project should be a profitable project. In order for the company to stay in business, projects need to reveal profitability at every level. There are several systems, we call them accounting systems, that are used to keep track of all the various expenses, including revenues, that a construction project can bring in for the company. And it is the job of the construction manager, financial manager, to keep accurate records of that accounting system and to be able to produce accurate reports. There are several statements or financial statements that will be used. Some of them we will see later on in future chapters. As I mentioned before, profit is important. There are systems in place that a manager can use to determine the amount of profit margin that it needs to be applied for every bid in order to secure the bid, and at the completion of the project manager or financial management can also study the profit margin obtained for that particular job. Cash flows. Cash flows are of extreme importance for construction companies. Without cash flow, a company will not subsist. Cash flows are measured in terms of amounts of dollars and cents that come into the company on a regular basis. Usually that time frame is measured in months, but it can be also in weeks. In any event, most construction companies will measure the amount of cash flows on a monthly basis, and that will determine how much money they have available in cash to be able to pay for their financial obligations, such as paying for materials, paying for labor, paying other subcontractors for the completion of that work. So cash flow is an extremely important aspect that companies must watch over in order for them to stay afloat. This concludes the video presentation for Chapter 1 for Construction Financial Management. Thank you.